This is David Patrick, Fitzstock Charts, a market video update for July 24, 2019, and we are still in no trend. 6 days of it, I believe. What do we do in no trend? We can go back 6 straight years since we launched in 2013. What do we do right now? We preserve year-to-date gains. We don't become leveraged long. What should we be doing right now? Have our stops in, take some day trades if that meets our risk profile. If we're aggressive, take some ESFL setups, probably with half your normal trading size. All your long positions, define your risks, use stops, see what happens. When we are in no trend, we have no edge, none. So although our performance numbers year to date and going all the way back to 2013 have been well over 750 or 75% win rate since we launched, the win rate during no trend and downtrends is significantly less than we are in an uptrend. So keeping things as simple as possible, A, if you're struggling trading, or B, if you're wanting to outperform the market consistently, wait for uptrends. It is that simple. Wait for uptrends. Higher time frame is the weekly. We're going to look at that. We always do. That is in charge. It's still bullish, and that's the reason why I have long market exposure. It's still below 100%. But I also have a large amount in cash because I don't really feel we have a big trading edge here until we go on an uptrend. If we go on an uptrend and we confirm prices higher, I'll become leveraged long again because that's what I do in uptrends. You have to manage your long market exposure according to your risk profile. I say it all the time. I'm 90% long market exposure, but don't clone me. You can't clone my risk profile. I'm trading super aggressive. I'm day trading with ES. I put on options. I put on triple longs. I become leveraged long. And a lot of times I use previous day's low as my stop. That is very aggressive. So you have to do what meets your risk profile. The ESFL has stops for swing traders, which most of you are. If you want to have separate accounts, swing trading and day trading, that's fine too. Keep them separate. I keep my larger account, my swing account, separate than my trading account. That's what I do. If I'm going to trade different time frames, so to speak, because day trading we use 5 minutes, those have to be in different accounts. You can't, as soon as you start using your 5-minute ROE money for swing money, you're gonna screw up. That's just what happens. The semis are leading. Can the semis just lead us up to infinity? The semis paid well. We'll look at the 90% club in a moment. But like I said weeks ago, well, at least over a week ago, we need more than tech. I love when tech leads. Tech's leading on the way down today, but I love when tech leads on the way up. But you need more than that. Otherwise, the market's fragile, and it can come down very quick. You could do what they call a staircase up and an elevator down, where you just have one big flush down day. They can wipe you out if you're overexposed. So the semis are leading. We're going to see if we can find anything else out there. The banks, FAS, look good. Are they going to see follow-through, which they haven't all year? I don't know. It's too early to tell. We're going to look at that 2012 historical chart pattern comparison too. All right, so let's look first at our 90% club. Let's look at our year-to-date performance numbers. 279 different stock options from our focus list engaged this year. 6 no scales so far, 24 losers, 249 winners, 89% win. 1,089 different options that are up over 90% since we launched the service. 298 triplers, 146 doublers year to date, and 38 triplers. Numbers are absolutely massive. Most recently, Soxel, OLED, Cyber, SQ, Splunk. Semis are leading, and I think we have a couple more. I'm not sure if it's AMD, Micron, AMAT, and CLAC. I don't even know if I've looked at CLAC. CLAC might even be on there. I have to look at that one. That continue to lead the market. The semis are ripe. I mean, they look good, but once again, we need more. We have to have more, in my opinion. For just look at the chart. So, all right, what do we have here on the left? We have the SPX, the current SPX. You can see we're We got knocked out of trend here. 1, 2, 3, 4, 5, 6 days of going back and forth. Does that give us a trading edge? No. We have no idea where we're going in the short term. None. Zero. Okay? MACD is heading lower. Price is right at the 10 SMA. We're way off the highs of the day. In fact, we're more close to the lows of the day. So we might come down and fill this gap. We don't know. We don't know what's going to happen. Over on the right is 2012. You can see I shaded an area which was somewhat similar. You might say, you know, is this going to happen? I don't know. If we're in this part of it, we're going to see new highs before a bigger pullback. So maybe if we continue on this historical chart pattern comparison, which is bullish, maybe we go see this 100% fib extension. How do you get that? You just take the recent lows to those recent highs and you measure from here to here, and 100% from there is there. And that's what we saw here. 100% from there to there is there. And that's before we saw a bigger pullback. So once again, we don't predict price. If we close green today, or let's just call it above the 10 SMA, and we see some kind of price strength either Thursday or Friday, then I would say we're going to continue on this historical chart pattern comparison, and maybe our optimal goal in the short term going into month end is around 3,064. That's the 100% fib extension. Do we get there? Who knows? We're not going to predict. Are we going to ride a no trend? No, we're not going to ride a no trend. We're going to wait. Once again, you have to wait and see before you start becoming leverage long again. Excuse me, for some reason my allergies are bothering me right now. I'm trying to get this back to the daily here so we can see things. I don't know why that's not showing up like it normally does. Well, either way here. I think I get the chart right now. So let's see where we're at. Here's our old highs here. We obviously don't want to come back below those. So far, so good with the pullback, right? We're still above that level. But we are in no trend. We flip to the weekly, which is our higher time frame. What's the weekly telling us, if anything? It's probably not telling us too much. I mean, I know it's still bullish, but it's really not. MACD is about right where it's been. We're still above the breakout. This 10 SMA is 29.21. That's increasing every week. We need to stay above that. Let's see, last week it was 29, so it's going to go up about 14 more points next week. What does that put us at? 29.35. That's where the green or the 10 SMA will be on the weekly next week, which we need to stay above to stay in a weekly uptrend. So we're in a 1, 2, 3, 4, 5, 6, 7 week uptrend on the higher time frame. So obviously that part's bullish. We're just stalling on the daily and we're in no trend. So we have to wait. We have to wait for 2 consecutive, or it doesn't have to be consecutive, 2-day close above the 10 SMA, and the second close has to be higher than the first intraday high. Those are the rules. All right, let's flip to stocks, or let's actually flip to the rest of the sector to see what we have. There's the Nasdaq. You know, some news came out yesterday. I don't trade news. I didn't even know the news until obviously I saw futures, and then a couple subscribers hit me up on Twitter. And it is what it is. We don't trade news, so if something happens where we gap down the next day and we keep going, that's just part of trading. We gap down on, you know, my opinion. Once again, I try not to have opinion on any news or anything with, whether it's the government, the Fed, or earnings. But, you know, when I look about the DOJ, to me, that's something that's going to take a long time anyway, if they're going to, you know, scrutinize FAANG like that. The Facebook news is significant. I get that. In order to take down the market like it did in after hours, when we actually had good earnings from Texas Instruments, which is a leading sector, I was shocked that we were down that much, and it didn't surprise me. We came and filled the gap pretty fast. So once again, it doesn't matter in my opinion. It only matters price. But I was shocked that futures were down like that on something that, even if it's perceived to be bearish, and you could look at that as bullish anyway, by the way. If they have to break up FAANG companies, they're going to spin them all off like they did with numerous companies 20 years ago, whether it was Lucent Technologies or something else, and you get shares of everything else. So you could look at it as bullish or bearish. Either way, it's something that's going to take a long time. I'm not even going to elaborate on my opinion on that because it's worthless. But with that said, more importantly to me right now is technicals And then fundamentals. Fundamentals are good, right? And in earnings so far, in my opinion, are good. So with that said, in tech or semis look very good. All right, I know I'm babbling on here. What is the Nasdaq telling us? Well, let's look at those old highs. And we called that a triple top, right? 1, 2, 3. And normally triple tops don't hold, and normally you go through it. So I want to say a couple things. First of all, this still looks like a cup and handle pattern. A cup and handle pattern does not work like a bull flag or a WV. It takes its good old time, and usually when it gets to this cup part, the handle part, it does some sort of wedging pattern like this. We'll get to the top, get back to the middle, and eventually start seeing some volatility. Sort of like we saw on that 2012 historical chart pattern comparison of the S&P. So right now, I don't think the Nasdaq's done anything wrong. In fact, we're very close to a 2-day, we're very close to an uptrend. Depends on where we close on the Nasdaq. So wouldn't that be sort of weird? The market, Nasdaq closes an uptrend after the news after the buy yesterday. So that would, if anything, be a catalyst to go higher, obviously to squeeze the shorts out who shorted the after hours yesterday, which is just crazy. Anyway, XLE, oil, it continues lower. I mean, the 200-day has been going lower basically since October last year. The 50's been going lower since the death cross and continues lower. So until the 50 gets back above this and we see a golden cross, we'll show you a golden cross in a moment. I think we had, Goldman Sachs had a golden cross, and we'll look at that. I don't know how it's affecting the stock. I did not trade the stock today, but we'll look at that. But currently for oil, the ETF, it's lagging, and we don't want to trade things that are lagging. Okay, XLF. This is, once again, this is a tough sector because we have destroyed it with financials since the launch back in 2013. However, this year has not been our best year trading the financials. With that said, I have to erase memory of the past, even once bitten, twice shy type of mentality, because this is bullish price structure. And the XLF, to me, is bullish. So as I'm scanning stocks, whether it's the ETF, the XLF, the FAS, or individuals, whether it's Citicorp, Bank of America, or Goldman Sachs, I have to have a non-biased opinion based on the past. And currently, the price structure of the XLF and the FAS look bullish. And we're going to look at a ton of stocks in that sector. So if we were looking for sector leadership, we have semis, and we are starting to see some life in financials. Are we seeing any life in small caps? No. IoT transports, they're still in this long wedge pattern. We want to see this breakout. This is good right here. Probably volatility is coming. If we can get banks, transports, and tech, we're going to be firing on all cylinders, and hopefully see some kind of volatility to really pick things up this summer. IBB is lagging. That did engage short the other day. It's hard to engage anything short in my book because we still have a weekly bullish higher time frame on the SPX. So people that are aggressive obviously can take longs or shorts at the ESFL, whether we're in no trend, uptrend, or downtrend. Just pull the throttle back. Do not trade big size until we go back into the next uptrend. Gold, these new highs came without MACD, that's bearish divergence, and there's a gap below. I would not initiate a new position in gold here. TLT looks like it wanted higher. It's doing a little bit of reversal. And MACD, which was starting to curl up, now is flat. This is a wishy-washy setup right now. It needs price strength to really engage, or price weakness here to engage on the short side. I wouldn't touch bonds until they tell us where they're going. Apple continues to look really good. I've been tweeting about this and putting this on the video updates, how this one looks like it wants to fill this gap. And then we have this gap up here. It does have earnings coming up. We do not take event risk, so be very careful putting on any new position going into earnings. Amazon, below the 10 SMA. I like the stock. Unfortunately, it's just currently below the 10 SMA. Netflix set up short the other day, I believe, paid. Bear flag, has some gaps down here. You got to be very careful. I wouldn't press short Netflix here. We're due for a short squeeze on that one, and then possibly this thing goes lower. I'm not going to try to predict. Booking, I tell you what, this one has not paid for a long time. And you got a head here, a left shoulder, right shoulder. This is somewhat of an inverted head and shoulders pattern. And above here, above this 1950, it's got to get through this gap up to 2050. So I think you get 100 points. And then if it starts even building more into summer, This one might finally start to pay again late in the summer. We got to keep an eye on this one. It's a promising chart. Facebook had the news today. It's actually acting very well considering the news, so it's fine. It's just not for a new trade I would avoid. Tesla grinding the 200 SMA. Nothing to do there. Google. I don't see a new trade there. That was the FAANG stocks. What about NVIDIA? Let's look at the semis. So the 50 has to get through the 200 for the golden cross, right? So we have to wait for that. But NVIDIA is set up here long, here long. We've had a lot of different long setups with NVIDIA. It still looks well. It still looks like it wants to pay on the north side. What about Intel? That looks very good. It looks like it wants to go into the gap. Texas Instruments is setting up for another ad. It's a breakout bull flag, and we'll see how that one pans out. AMD looks like it wants continued higher. Micron looks very bullish. Light looks okay. Xilinx coming right into that gap, and looks like we're going back to 140. That one looks pretty good. I think that was it for the semis that I wanted to talk about. Oh, KLAC. Yeah, that one was a bull flag breakout, which is our number one setup right here at 134. And I think that one is in the 90% club. I don't know how I missed that one, but that one looks very, very, very good. KLA 10 core. Okay, so let's get to the software, which has led a lot this summer. Microsoft looks slow. It still looks bullish. Oracle is bearish. It's in a 4 or 5 day downtrend here. Adobe pausing. What about Coop? Now. So it does look like this sector leadership is starting to fade a little bit, which is good. Maybe that goes into semis. Maybe it goes into banks. Maybe it goes into IYT. Maybe it goes into something else. I have no problem if those software stocks start to consolidate. They've had huge runs. Obviously, we want to see the money stay in the market and go to either some other stocks in tech or some other sector. Either way. Team, I don't see a ton of leadership in tech besides semis. What about Twitter? Snap. Twitter looks okay. Come on. Snap. There we go. Snap actually looks pretty good. It's a gap up, and that's a bull flag. So Texas Instruments and Snap look like they're setting up to add. What about Baba? Looks pretty bullish. It looks like it wants to fill this gap at 190. I think there's earnings soon. I got to double check on that. Baidu looks okay. This is a bottoming process that's taken a long time with Baidu, and that's one that could erupt late summer also. We have to keep an eye on this one because that one could start paying. Expedia looks very good, and that's almost at a 52-week high. Do we look at Roku? Not sure. Roku's in a no trend here with MACD's weak, so it doesn't look like it's a new position for us. What about Vive? Nothing. BMW, Momo, Box. Let's get to GoDaddy, Wix. Ooh, Wix looks interesting. That might be setting up long. Depends on where it closes. What about the exchange stocks? Wow, they are reversing pretty nasty. So they're breaking trend and leading on the way down. That's interesting because that's money. Once again, software and exchange stocks were red hot. The money is coming out of those sectors. So where's the money going to go? Well, it's either going to come out of the market or it's going to go in other stocks. Our job is to find what stocks it goes in if it stays in the market. We're going to continue to scan for those. Is it going into oil? COP? No. PSX? No. Oxy? No. These stocks look very flat. I don't see too much going on. CVX was the only one that looked decent. And I don't know when earnings is for that one. That's actually very decent. Maybe head, left shoulder, right shoulder. This thing could hit a 52-week high, and that could lead that sector out. So we got to keep an eye on that one. Tilray, Kronos, these doing anything? No, they're doing nothing. I know we forgot the banks. I'll get to those in 1 second. FVRR, Fiverr. Just not enough momentum to get me excited, so I'm not going to do anything. Let's get to the banks. JP Morgan, once again, I think out of the 24 stops this year, we had 6 or 7 of them were in the banking sector. You can't worry about the past. This is a bullish setup. You could call this a cup and handle. You could call this inverse head and shoulders. Either way, this setup, technically, as of right now, at 11:41 on Thursday, on July 24, 2019, it is a bullish setup. Citigroup, bullish setup. Bank of America, bullish setup. Morgan Stanley, Goldman Sachs, those all look like bullish setups to me. So I cannot worry about the past. The future or the current state of the market with the financials looks bullish. What about the MasterCard and Visa? They're looking to slow down. Is there any life in biotech? Amgen, no. Guild, no. Vertex, no. Aluminum, no. REGN, no. So this sector has just completely fallen asleep. I don't see too much. Do we look at ISRG? ISRG probably out of all of them looks the only one that looks decent. CMG, new highs. So that's the third one. What was it? Snap, Texas Instruments, CMG. Those are breakout stocks. So if the market holds up, those are the stocks we look to add to. They're the strongest stocks showing breakout patterns, and those are the ones we want to own. If we're not already long the market, or if we're looking for more long market exposure, these are the ones you want to own, the strongest stocks. I'm having some difficulty typing. Apologize for that. Docu, nothing. Let's go to Uber and Lyft. Lyft's slowing down, and Uber's slowing down, so there's no momentum there at all. So let's finish up. We're 20 minutes in this video. The market's in a 6-day no trend. The Nasdaq is extremely close to going into an uptrend, even though with the bad news yesterday after the bell. So if you if you hit me up on Twitter, you hit me up on email and say, what do you think? You know what I think. I'm long the market. I also have a bunch of cash. We have a bullish historical chart pattern comparison to 2012. We have a weekly higher time frame setup, which remains bullish. However, we are in no trend. So I have to stay open-minded for either us breaking last week's low, which would get me flat the market, right? Or us seeing price strength confirmation. If I have to lean, which I've already leaned a little bit yesterday, it's to the long side, right? Because of the weekly time frame and because of our historical chart pattern comparison. But that doesn't mean that I'm going to be right. My stops are in place. I'm a robot. I get stopped. I mean, we've had 5 uptrends this year. You should be high stacked with profit. And if you're not, we'll have a consultation. We'll have a 5-10 minute consultation. Hit me up on the email. I'll see if I can help you out. Trading, although sometimes I post on Twitter, oh, this is easy. It's not easy. It's not easy until you become accustomed to a system that works for you, a methodology that works for you consistently. It works for me consistently. I want it to work for everyone consistently. I'm here to help. I don't have all the answers. All I do know is trade the uptrends, trade them aggressively. And if you've done that since 2013, you've made a lot of money. So right now we're not in an uptrend, so sit back and wait. If we see price strength confirmation, you see the email come in, bright green, uptrend, start allocating more risk, long market risk exposure to your account. That's all I have for the market video update. Have a great day.